Welcome back, financial enthusiasts. Today, buckle up because we're diving deep into the captivating world of Eaton Corporation. We're about to unravel some fascinating numbers and figures that'll leave you amazed. Let's start with the basics, shall we? Picture this. Eaton's price-to-earnings ratio or P/E ratio over the trailing 12 months is a staggering 36.99. But hey, don't be fooled by this number alone. Over the past 5 years, it's averaged a more modest 22.60. Now, hold on to your hats for this one. The forward PR sits at 26.06, giving us a glimpse into what the future might hold. Both numbers suggest that there has been a change in the growth expectations that investors had in the company. And speaking of the future, the price-to-earnings growth or PG ratio is 3.23, hinting at potential overvaluation, because remember that value below 1 is when a stock is considered undervalued to his growth prospects. But wait, there's more. Check out that return on equity at 17.85% and return on assets at 8.77%. Impressive, right? It's like Eaton's financial engine is firing on all cylinders. These numbers indicate how efficiently Eaton uses its shareholders' equity and company assets to generate earnings. Continuing with earnings, now, let's talk about earnings per share or EPS. It's currently at a healthy $8.02, with a promising EPS growth projection of 11.46% over the next 5 years. Hold on to your seats, folks, because we're about to take a thrilling ride through Eaton's earnings history. Over the past decade, EPS has shown a positive evolution, growing in 8 out of 10 years with a compound annual growth rate of 7.72%. Therefore, the expected growth for the next 5 years is above the last 10. But wait, there's a twist in the tale. The free cash flow per share has been a bit of a roller coaster, but fear not, it's been consistently positive overall, boasting a compound annual growth rate of 11.8%. Let's talk about dividends, shall we? Eaton's dividend yield is currently at 1.27%, which is far from his 5 years average yield of around 2%. And it has had decent growth over the last decade of 7.43%. Now let's zoom into the heart of the financial maze, operating and profit margins. With an operating margin of 17.13% and a profit margin of 13.88%, Eaton's financial fortress seems to be standing strong. Hold on to your calculators, because we're about to crunch some numbers. Over the past 8 years, Eaton has shown a positive evolution in both revenue and earnings, outperforming the market despite the 2020 hiccup. This evolution has been translated into the market price of Eaton obtaining a total return greater than VO during the last 5 years. Now, let's talk about debt. With a debt-to-equity ratio of 0.52 and a long-term debt-to-equity ratio of 0.46, Eaton seems to have its debt situation under control. And now, for the grand finale. Eaton's average price return over the last 52 weeks is a jaw-dropping 67.51%, making investors grin from ear to ear. And with a market cap of $116.63 billion, Eaton's proving to be a heavyweight contender in the specialty industrial machinery arena. But hold your horses because the analysts are chiming in. With an average price prediction of $282.63 in the next 12 months, some might see a downside of 4.74%, and also me. I'm seeing fair value at $229.90, suggesting a potential huge overvaluation. Who will be right? Let me know your opinion in the comments. Phew! That was a whirlwind journey through the financial universe of Eaton Corporation. Remember, folks, while the numbers may dazzle and amaze, it's always crucial to do your own research before hopping on this financial roller coaster. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing!